Warren Buffett's viewpoints on current digital assets, such as Bitcoin and NFTs, are frequently criticized. He referred to Bitcoin as a worthless asset that does not generate anything, and he would not purchase every Bitcoin in existence for $25, even when people are willing to pay up to $70,000 per coin, and its market capitalization has surpassed $1 trillion. Buffett considers this to be foolishness. It is not the first time that he has harshly criticized the new developing technology. If you revisit the dot-com bubble, he had similar opinions regarding internet companies. His close friend Bill Gates repeatedly attempted to persuade him to invest in tech companies such as Microsoft, but he consistently refused. He has missed numerous excellent opportunities, including Amazon, Netflix, and Tesla. Each of these equities grew by a few %1,000%, equivalent to an investment of at least $1,000 in Tesla when it went public. Today, worth approximately $225,000. A $5,000 investment would have yielded you $1 million. Investing a few $1,000,000 in these enterprises would be worth at least several $100 million today. Despite missing out on so many wonderful opportunities, he has a net worth of over $100 million when the economy is in a recession and the stock market is falling. During the last recession, in 2008, he was named the world's wealthiest person, surpassing even Bill Gates. But in addition to crypto technology and exchange-traded funds, Warren Buffett has always avoided another industry. Believe it or not, Warren Buffett has never invested in the housing market. The only piece of real estate he has ever purchased is his home in Omaha, Nebraska, which he purchased for $31,500 in 1958, and where he has resided ever since. The obvious query, therefore, is why the most successful investor in history has never invested in real estate. Why does he avoid real estate when it is the most secure investment available? Does Warren Buffett have knowledge that we do not? Before we answer these and many other queries, please give this video a thumbs up, and let's find out. You can criticize Buffett's investment strategies to your heart's content, but that won't alter the fact that his conviction to his strategy has allowed him to outperform the S&P 500 by 84% over the last 20 years, making him the most profitable investor of all time. He has been involved in the stock market for what seems like forever, and he has consistently made profitable investments. Warren Buffett once was. What does he believe about purchasing a home? His response was resolute and direct. Purchase a home if you plan to reside in one location for an extended period of time. He stated that a 30-year mortgage is the best financial instrument in the universe. If it is such a wise investment, then why? He consistently avoids the true. Even when the housing bubble burst, Warren Buffett was resting on a mountain of cash because he knew the housing market would eventually recover. Therefore, why did he not invest in real estate? There are numerous causes. Let's begin with the initial option. Real estate investing differs from stock market investing in that property management is a full-time occupation. Perhaps one property is not a big deal, particularly if it is a side property. However, once multiple properties are acquired, it becomes a full-time business. It is not guaranteed that you will always be able to rent out your property, but you must continue making your mortgage payments. Second, something is always broken. A property requires maintenance, and in times of crisis, it may not be possible to rent it out for extended durations. That does not imply that it is a terrible business, only that it is a. Therefore, you must devote the same quantity of time to managing it. Because he realizes his time is limited, Warren Buffett has never invested in real estate. If he did, he would have significantly less time to seek out great investments. Throughout his tenure, Warren Buffett invested in real estate, but he primarily invested in interest rates. Currently, he holds a substantial stake in Store Capital Corp. It is a publicly traded American real estate investment trust, a real estate investment fund. They are similar to investing in securities. The second reason why Buffett avoids real estate is how challenging it is to locate a good deal in the market. Here's how to make an excellent investment. You must discover an excellent company that is incorrectly priced below its actual cost for whatever reason. It could be a company with a solid foundation that is readily scalable, or one that has developed a technology that will generate enormous profits. During times of crisis, the stock market is flooded with mispriced equities once they have been mass-produced. When people panic and begin selling their securities en masse, for instance in response to rising interest rates or crushing stock prices, investors are scared away and they begin to liquidate their holdings. To the extent that Apple stock, for example, declined by approximately 25% from April to June. A few months ago, did Apple lose a quarter of its workforce? Did its sales decline by 25% in a few months? No, the market was driven by panic. Thus, even successful enterprises suffered. Therefore, it is significantly easier to discover a great deal on the stock market than in real estate. Firstly, real estate prices do not vacillate rapidly. There are periodic real estate disasters, but they only occur once every decade or two. And if there is a great deal in the market, a real estate agent in that region will likely close the transaction before anyone else does. In contrast to real estate, companies must go through a lengthy and rigorous approval process to be able to list their stocks on the stock market. As a result, we do not have a real estate exchange where people can browse multiple properties from the comfort of their offices. Additionally, they are required to publish quarterly financial statements, which provides Buffett with a competitive advantage when searching for excellent deals. Real estate doesn't produce much. It provides a shelter over your head, and nothing else. Yes, the roof may be superior, but how many guests are willing to pay over $10,000 per night? Nonetheless, a business can expand its operations indefinitely. In 2018, Buffett acquired 5% of Apple for $36 billion. In a couple of years, when Apple's market size surpassed $3 trillion, his net worth increased to $160 billion, and he has also received annual dividends from Apple averaging approximately $775 million. It is impossible for him to have made such a deal in real estate, and it is not even his best contract. Buffett paid $25 million for See's Candy in 1972, and it has returned $1.35 billion to Berkshire, even after accounting for the $32 million that Berkshire has invested in the company over the years. This is a remarkable return on investment. The third reason is that the stock market simply has more money than real estate. It's a simple truth. As of 2021, the United States real estate market is approximately $3.7 trillion. In contrast, the stock market is valued at approximately $93 trillion. The housing market is significantly smaller than the stock market. This is why none of the top 10 richest individuals in the world are real estate investors. All of them have either invented something or established a business. In fact, the wealthiest real estate investor is Shao Qi, a 91-year-old real estate magnate who ranks 29th on the list of the world's wealthiest people with a net worth of $28.6 billion. He is more than an investor. He is a developer of real estate based in Hong Kong. Donald Brand is the wealthiest real estate developer in the United States with a net worth of $17 billion. Buffett intends to make the most of his time and talents if he can earn over $100 billion by investing in the stock, despite the many opportunities available on the stock markets. Why invest in real estate? The reason for his initial success was his dedication to his strategies and principles. He never switches assets simply because they are popular. Perhaps this is the most valuable lesson we can learn from him. If you intend to remain in a location for an extended period of time, purchasing a home is a smart investment. However, entering the real estate market is a business, and the issue is whether you wish to start one. If the answer is no, because you are already in a different industry, there is no sense in entering a field in which you are neither competent nor enthusiastic. That's all for today. If you enjoyed the video, subscribe to our channel Luxe Mindset, and don't forget to hit the bell icon.